Everyone's talking AI and it's buzzword time, but we are spending a lot of time in crypto AI. We've made several investments in kind of the agentic commerce space. I think it's early, but that is one of those categories that I think will be massive, and it's a timing question. I don't think we're going to be in a world where there's like a monolithic stablecoin standard. There will be fragmentation of issuers. Incentives drive the outcome. So right now, if you're a merchant or a major platform and you can be participating in the economics of the interest float from stablecoin issuance, why wouldn't you? The counter to that is liquidity matters a lot. So I don't think there's going to be thousands and hundreds and thousands of stablecoin standards. Speculation can be the use case. There's an innate human need or desire to speculate on the future. It can be interpreted as a bad thing or as a good thing. It can manifest in different ways, but crypto's superpower is creating markets for everything. And that just completely upends a traditional VC allocator's mental model.
Welcome everyone to the New Money Podcast. I've got the amazing Hoolie, head of Coinbase Ventures, with me today. And we're very much looking forward to an exciting episode where we'll talk about the origin, the past and the future of the firm. We'll talk about a couple of the theses that you find interesting today. We'll talk about regulation, stablecoins, all of these good things, of course. And I'm very much looking forward to it. Hoolie, great to have you.
Likewise. Thanks for having me, Fernand.
Awesome. So I think the team checked it out on PitchBook in the third quarter of 2021. Coinbase Ventures hit 49 investments, a new deal every 1.8 days. What has changed since then, and how does the world look today?
Yeah, maybe it's helpful to just kind of start with the origin story and where we've progressed to with Coinbase Ventures. We started Ventures 2018. Really, it was an experiment. It was just a blog post. There was no dedicated team around it. Bunch of folks working on it nights and weekends, and just a very simple mandate to help seed the ecosystem around crypto and just back exceptional founders who are really moving the crypto economy forward. Fast forward to today, we're one of, if not the most active investor in the blockchain crypto space. We're continuing to invest off the Coinbase balance sheet, but we operate very much like a classic seed Series A fund and also make larger strategic investments, as well as ability to do things in liquid token investments. So we've made over 500 investments now all across the world, across multiple strategies. We continue to be pretty active, but we've also evolved our heuristics and portfolio construction thinking to operate with a long-term venture capital mindset.
Awesome. Yeah, lots to unpack. If you think about these early days, like, was it a top-down thing and Brian just said, hey, let's do some deals, or was it kind of a bottom-up experiment that you and a couple of folks at Coinbase drove?
Yeah, it's a testament to like the Coinbase culture of which I think Brian has really seeded, of like action creates information. So let's just try things. So if I recall, I think it was a blog post that Balaji, who was our CTO at the time, and Emily, our COO, kind of put together and threw out. And Brian really just empowered folks to try things. And it was a natural evolution. We had great folks, employees at Coinbase who were leaving to start their own things that we wanted to back and support. We had our investors on the Coinbase cap table, who are kind of top tier crypto VCs, were also bringing us into rounds. So it kind of happened very organically with like a kind of decentralized model. And then as it started bearing out and we started seeing real value coming from the endeavor, we formalized it more, put a dedicated team around it, and dedicated mandate.
Awesome. And you mentioned like, hey, like once you've noticed it creates real value, you double down on it. How meaningful is Coinbase Ventures for the overall Coinbase operation, right? Like, I mean, such a large company, like, does it move the needle, and can you drop some numbers here?
Unfortunately, can't drop numbers. I'll defer to our finance and IR folks who handle all our earnings and K1s on that. What I can say is we're very happy with the portfolio performance. We've been doing this now almost 8 years. We think about it in a long-term, venture capital ROI mindset, and it's definitely been accretive and positive. Beyond just the financial metrics, it's also been, I think, borne a lot of strategic value and fruit for Coinbase. So we have this relationship connectivity ecosystem with over 500 great founders in the space. They help us see around the curve around where the space is going because it moves so fast. Some of our investments have turned into M&A conversations, some turn into like BD partnership conversations. That's not the primary rationale we're going out with when we invest, but it's really helped to build an orbit around Coinbase as a broader platform.
Really interesting. What's like the most impressive example of like the ecosystem that you've built benefiting Coinbase or the company strategically? Like, do you have a favorite one?
It's, I can't pick favorites. It's like picking your favorite child. A good a good example or like case study, I think, is our work with Morpho, which is a leading borrow lend DeFi protocol. We were early investors from the venture side, and then very organically, as our product teams on Coinbase, on the Coinbase.com retail app, were exploring bringing on-chain borrow lend directly into the app. Morpho was selected as kind of the key partner, and so that launched earlier this year. We've already gotten to over $1 billion in Bitcoin back loans borrowed through Coinbase on Morpho, and 2 weeks ago just launched the lend side of it. That's already past 200 million in USDC. So it's an example where the investment, we didn't go in investing knowing or thinking that there'd be that type of partnership in the future, but having aligned incentives makes a lot of sense.
Interesting. And do you guys like generally operate under like a for-profit mandate, or is it also largely strategic?
We're very much financial ROI first. We're thinking about it just like a classic. We're capitalists, and we're allocating capital, stewards of capital. We're gold on the same metrics that a traditional VC would be. We do have a lot of flexibility, right? Because we're investing on the balance sheet. We don't have some of the constraints that folks may have, more conservative LP base that they're managing that have to work around. So we can move downstream, upstream, later stage, earlier stage. The vast majority of our investments are in the kind of pre-seed to Series A, $1 to $5 million check range right now. But that changes over time. We move with the market.
Really interesting. To take us back to that early days, like who was the original team? Was it just you? Like who was involved in really setting things up?
Yeah, it was not just me, and I actually probably got involved probably a year after that initial launch. It was a group of really volunteers, product folks, engineering folks from the corp dev and biz team, which is the team I joined, the executive team, hands-on. It really was like a nights and weekends type thing. No one had a full-time job of Coinbase Ventures. Then as time progressed, we saw the value, and the executive team supported putting more infrastructure and a dedicated team around it. So I was always involved in some degree as long as I've been at Coinbase, but really went full time in it about 3.5 years ago.
Interesting. Can you remember the first deal that you've done?
That's a good one. I don't remember the first exact one I did, but a very early one was Dune Analytics. I remember that one vividly because that was a gut reaction. Wow, this is a really cool tool that I see I'm going to be using every day. So let me try to get in front of the founders. And we had some connectivity there with Union Square Ventures that were financing the round. So that I always think of that as one of my first, but I believe the very first investment we made out of Coinbase Ventures was into Etherscan. That's kind of portfolio company number one.
Well, let's look into the future. You mentioned over time you guys evolved, right? In terms of portfolio strategy, the way you think about the fund. Like walk us through that evolution and like what's important now that maybe wasn't as important a couple of years ago.
Yeah. So I'd separate into two things. It's what we're investing into, and then how we're structured, like what's our product skew on the market. So maybe I'll hit the second one first. So we've evolved to just have multiple strategies. So we still do these kind of smaller, high velocity, what we call ecosystem checks, which are really just bets on great builders in categories we care about. We've put a lot more thought and just heuristics around this kind of core portfolio construction in that like $1 to $5 million check range. We also have the ability to do larger strategic investments. There's some that will be hitting, there's one in particular that I think will be hitting the wires today that I can't talk about yet, but folks listening to this will have an example because it'll be in the headlines. In terms of what we invest into, we've always had the humility to know that we are not the best and brightest, and we're going to let the exceptional builders and founders kind of lead us to where we go. I think doing that has allowed us to be pretty early to things before their consensus. So we were investing in all the major NFT platforms before NFTs went mainstream. We invested in all the major DeFi protocols before DeFi was a buzzword. We invested in every L2 before anyone had the idea to launch Base and launch our own L2. So where we're at now, if you kind of shift there and kind of where we're spending time and kind of the themes we're going to, the big themes at the moment are we're coming out of stablecoin summer, like stablecoin is like the theme of the past few months. I'd be curious to hear how you're thinking about that for your business, because it candidly, the stablecoin trend is pushing us into business models that look more traditional fintech than pure crypto native. We're continuing to invest a lot in DeFi. Third would be on-chain consumer applications. So that's everything from prediction markets like a Polymarket or Kalshi to loyalty to different on-chain creator economy type plays. And then the last more frontier bucket, and I hesitated because folks immediately have a reaction that everyone's talking AI and it's buzzword time, but we are spending a lot of time in crypto, intersection of crypto AI. We've made several investments in kind of the agentic commerce space. I think it's early, but that is one of those categories that I think will be massive, and it's a timing question.
Yeah, let's unpack these a bit, right? Like a bunch of thoughts. I mean, let's start with AI. I think like my friends that are building like really like agentic finance, agent payments. I think what I've heard is like just nothing's happening yet. Right? There's like no volume, which is I think totally fine, right? I think it's like a directional bet on a very different future. But what are you saying? Are there any like real use cases that are emerging, or is it really just kind of like still in R&D mode?
Yeah. So there's a bunch of ways to unpack that. So one, if we look at block space, like that's a view that we look at what's happening on these chains. The amount of block space transaction volume that's being propagated by AI agents is certainly going up and to the right. Now, is a lot of that kind of spammy, LLMs shilling meme coins and things like that? Probably. We're seeing agent-based trading interfaces start to proliferate. I think you're going to see it in TradFi as well as crypto, where just the human computer interaction model is shifting, and you can give the agent as a user significant agency over kind of financial transactions. For agentic commerce, yeah, I'd agree. Like it's a timing question. I don't think you have to squint too hard to believe that a significant amount of GDP is going to be flowing through an agent-based commerce economy. There's still some unsolved problems. We think crypto plays a huge role there, right? Because internet native money makes a lot of sense to be the substrate in which machines are paying machines, but you still have to bridge through identity, things like KY. That question of how much agency do you actually give the agent as the end user? But we're talking to all the major model companies. We're kind of seeing how the platform is evolving. R&D mode is probably the right way to characterize it, but it's the type of thing that once it tips, it's going to be vertical. It's not going to be like a slow burn.
And when you talk to these model companies, like, do you feel they're keen on capturing the value and like building things themselves? Or is there consensus around, hey, that there's like a new category to be created? Or do you feel maybe with stablecoins, like incumbents are actually going to capture a large chunk of the value? Like, what's your feeling about value capture?
Yeah, it depends on which model company you're talking about, and some certainly have a want to be, clearly want to be the operating system platform going forward.
OpenAI.
No comment, but yeah.
No comment.
But even in that world and model, there's lines in which those platforms don't want to cross, right, around risk, around liability, around managing financial transactions, and they truly are building these as open platforms. So you've probably seen, from the OpenAI dev days, the direction they're going. So be able to call your Uber directly from the chat interface, and ads are going to show up in your chat interface. So all the piping on the back end of how you actually move and transfer value through agents is still it's still a value. The value capture there is still up for grabs, is my sense.
Yeah, it's interesting. Let's talk about stablecoins for a second, right?
Yeah.
And kind of zoom in on these. Issuance as a service. What's your thesis? We've seen the M0 round. Nick and Agora is doing great work. Like, I always wonder, like, I just don't know, frankly, like, how will the future look here? Like, will every big company launch their own stablecoin? Like, is there upside in doing that? Like, enlighten me. What's the thesis from your side?
Yeah, I think it's a great question. And I don't know if I have like the crystal ball there. I don't think we're going to be in a world where there's like a monolithic stablecoin standard. I think there will be fragmentation of issuers. You've probably seen Stripe's open standard. We were investors in Bridge, which was acquired by Stripe. I think like incentives drive the outcome. So right now, if you're a merchant or a major platform, and you can be participating in the economics of the interest float from stablecoin issuance, like, why wouldn't you? The counter to that is liquidity matters a lot. So I don't think there's going to be thousands and hundreds and thousands of stablecoin standards. Even if you are, as an end user, transacting with like, app stablecoin one, it likely will be wrapped back to one of a handful that have like true global liquidity. But the meta trend is globally, there's tremendous demand for dollars and programmable dollars. So that like loud sucking sound outside the US is not going to stop. And then now post Genius, there's a very clear, framework in place that it's a very clear, like, 10 to 100x penetration growth story for just stablecoin adoption. How the issuer landscape, the market landscape nets out remains to be seen, but I don't think it's necessarily hyper fragmentation. It's also definitely not going to be like a monopoly duopoly type setup.
Yeah, I tend to align, right? Like I think for the payments use cases, it has to be a winner take most market, right? And because liquidity just drives slippage and spreads on the trading pairs. I think for the store of value use cases, I think maybe yes, like maybe there's really a wealth of ecosystem stablecoins that provide better economics to the platform and the ecosystem, right?
Right.
But
Yeah.
interesting. What else is on the radar in terms of stablecoins? Like what are the big trends that you're looking into here, and like what areas are interesting to you today?
Yeah. So stablecoin powered payments continues to be a pretty interesting category for us. We've made several investments there, and we are seeing in some of those players really take off from a traction perspective. Once you break down the existing payment processing and kind of like remittance corridor payment flow landscape, it's such this like rat's nest of different permutations of corridors, pay-ins, payouts, all that stuff, that there's a lot of surface area for kind of startups to come in and improve things and capture value. We've done a lot of our investing in kind of stablecoin infrastructure and like orchestration. I think the banks are all getting pretty serious about at least figuring out how is this primitive going to actually map into like our ledgering systems and our we got to figure out how Fiserv is going to talk to stablecoins and things like that. And so, yeah, payments, and then just broadly increasing amounts of like payment processor volume just flowing through stablecoins. And especially as we think about these different like cross-border permutations, it makes a ton of sense.
Yeah, I think like my beef with the payments use case is always, and like to a large extent, I'm drinking that Kool-Aid, right? Like very, very much so, like I'm very much aligned with that. But I think one thing I'd love to get your opinion on, like, so with the payments use case, I think you got to cross-border payments, right? You got to separate a bit the FX from the payment rail.
Yeah.
Right. And so on the FX side, I struggle to believe that like it's really more efficient. Like, why is it more cost efficient? Because I think if you think about FX from a first principles point of view, right, like the more liquid currency trading pair, the lower the spread. Like it's a very simple market economics. And why should the on-chain trading pairs be more liquid than the off-chain trading pairs today, right? Like, and now pair that with the quote unquote stablecoin sandwich, where you actually do two trades, and I think it really breaks for me. Like I see massive value in the like payment rail, right? Like versus a wire or Swift kind of like right. Conundrum. But on the FX side, I actually think you're actually paying up. Like, what's your 2 cents?
Yeah, I haven't seen that, or not necessarily in the data in terms of, for some of the companies we work with, that the FX spread is leading to a net negative kind of end-to-end economic flow. I do think your point around liquidity is valid. There's, like you said, it comes down to liquid pairs. So if you have a set of fairly fungible truly fungible, programmatically fungible stablecoins that USD denominated that have fairly liquid books against the major currencies of the world, then you would imagine that those FX spreads aren't necessarily a worse deal than the fiat flow. I do think there are efficiencies from like settlement time and kind of the intricacies there, and you start getting into how some of these things are financed. But yeah, I don't necessarily feel like it's as much of a blocker as I think your sense might be. It might just be a timing question of when the liquidity is there for these different permutations.
Yeah, I think. I mean, my view is that like just more of an opportunity to just capture rich margins of incumbents that are so rich that you can actually pay up off on FX from a unit economics point of view, and you'll still build a better solution for your customers because you're just undercutting these margins.
Definitely agree with that. It's the your margin is my opportunity story. And then the question is, did the economics for everyone kind of trend to zero over time?
Exactly. And I do think this is something that we'll have to look out closely for, and also do some work on creating like really deep liquidity, because I do believe that even if you have like fungible USD denominated stable coins, like FX markets and fiat are still so much deeper.
Yeah.
Right. Like liquidity is still so much higher. And so this is, I think there's like an interesting play here somewhere, right? Like I think there's work to be done, because if you really want to like operate a wholesale scale, I think that for me has always been like a point of contention, and I think something that still has to develop, but that's totally fine. And I think people are getting to market and just capturing the margin undercutting opportunity, and then capturing market share, and then liquidity will hopefully follow. Right?
I'm curious, what do you think about a world where every kind of last mile fiat pair has its own stablecoin, native stable? There's a yen stable, there's a the real stable, and those FX rates are just kind of set programmatically. There isn't like obviously there's some type of oracle or like pricing function, but there isn't that much of a kind of middleman layer to extract.
So you have like a local currency stablecoin, and there's then exchanged like at par value one-to-one, into like fiat currency. I think it solves the sandwich problem because you
Right.
only have one conversion, right?
Right.
And I think like that's a big one. If you're really thinking about like core, like competitive scale unit economics.
Yeah.
I think what it doesn't answer for me yet is like the first principle question, like, hey, why is the on-chain trading pair yen to USD, why is that more liquid on-chain than off-chain? And if it's less liquid, there's no reason in like a free market that that the spreads are tighter. And so this is where I think like we got finances, right? But I think it takes out like the second conversion, which is big, right?
Mm-hmm. Yeah, no, that makes sense. Yeah.
And I think there are good reasons to believe that like FX markets on chain will have an easier time to drive meaningful capital formation and will be more liquid in the fullness of things, right? Because I think like there are massive efficiencies there, especially once again emerging markets, right? Where like liquidity isn't like this super sophisticated like capital market structure, but like an African bank calling their guy at the other African bank or ping something in a Telegram group, right? Like surely like internet FX markets can be better than that in the fullness of time. But I think that is really like one to really drill down on, my opinion, when we're dissecting the space.
Yeah, no, I don't disagree. I think it's a very first principles way to think about it. I think the secret that no one wants to say out loud, a lot of the pull sound is also, especially in emerging markets, is coming from endpoints that just want to hold in USD, in a USD denominated pair. And so that last hop, yes, it has to happen for certain use cases, but that the amount of float that just wants to reside in a US denominated medium of exchange is increasing, and there's kind of a escape hatch for folks who had no other way to do it before.
Yeah, 100%. I think as soon as people do not want to off ramp, economics look much better already, right? But yeah, I think it's like totally fine. I think that what you're saying, and then also, I think many of the early adopter customers are just completely underserved, maybe for good reasons, right? Like because they're super risky customers, for example, right? And so, and that's also totally fine, right? I think you'll have early adopters for every major technology, right? But I think you got to think hard, like, is there like a first principles way to choose scale and like then through that viable mainstream adoption by working through that early adoption, which maybe is not the most sustainable business for decades, right? Because in the end, maybe the underlying global south business is a scam, right? Or like does launder money and all of these things, which you have to manage if you ever reach true scale, right? And you will not get around it.
Yeah, totally agree. And you see this with kind of every technology S-curve, especially in fintech. Like the first set of customers, you often have to fire like cohorts of bad customers. That's where like the insurgents kind of first start getting traction. But over time, there's a big enough pool that you can penetrate into. But yeah, that's a common pattern, I would say.
100%. It's the history of payments. Awesome. Let's do a round of quickfire questions.
Yeah, let's do it.
One thing that traditional VCs still don't understand about crypto.
Speculation can be the use case. People want to, there's an innate human need or desire to speculate on the future. It can be interpreted as a bad thing or as a good thing. It can manifest in different ways, but crypto's superpower is creating really markets for everything. Now that we have like clear path to regulatory clarity, you've seen it with prediction markets, you'll see it all over the place. I really buy into this, like wherever you want to brand it, like markets everywhere type of framework. And that just completely upends a traditional VC allocator's mental model. Like when liquidity might be on day 0, not on day 10,000. And so then how do you back into that as an allocator?
Do you know Jackson from Asura?
I do not.
He's a my tier fellow class. He's amazing. He's building everything markets, right? I think very interesting approach to the topic. Check him out afterwards. I can ask him if you're keen to chat.
Awesome.
Which one of your VC competitors do you respect most?
Wow, these are great questions. Again, hard to pick a favorite, and because of our model, we're fairly collaborative with all the VCs. I'd be hard to pick one. I have to say Chris Dixon's thinking very much influenced me and got me into crypto in a big way. Fred Wilson's approach to VC inspires me a lot, and kind of the first principles thinking he's had around managing, deployment and returns. We're huge fans of Paradigm and the team over there. So yeah, hard to pick one, but just we need more crypto focused VCs, not less.
You mentioned being early oftentimes to trends, and I think if you're early, you can't always be right. Like, what's the worst trend you've invested in?
Yeah, a lot of them are it's timing. So we made investments going into in 2020, 2021, not really foreseeing the regulatory headwinds that were like coming so imminently. A lot of things that now look very interesting. Like, oh, you have a Bitcoin ETF in your 401k. Like, we invested in a company that was doing Bitcoin in 401ks. That was totally put on ice for the duration of
Yeah.
kind of that regulatory overhang period. Now it seems like pretty obvious. Trends like that where the vagaries of like regulatory dynamics kind of iced the timing, but those are probably, it's more about timing than trend.
Awesome. What's one founder trend, a trait you over index on?
Long-term orientation and just intrinsic motivation. There are folks who are exceptional in many categories, but you can parse that they're kind of short-term in their horizon. And we're very much looking for missionaries, not mercenaries, and draw inspiration from Brian and kind of his approach and his like 30-year view he's taken with Coinbase since day one. That's probably the single attribute that I index the most on.
Awesome. Hey, Hoolie, thank you so much for joining us today. This was awesome. I appreciate it, and looking forward to chat soon.
Likewise. Thank you.